Japan's economic output is on the rise. The Bank of Japan ended its negative interest rate experiment, and the Japanese yen hit a 34-year low. With me here to talk about these seismic shifts in Japan's economy is Yujiro Goto, head of Forex strategy at Nomura, a Japanese investment bank. Turbulent times for the Japanese economy. What do you make of this, Yujiro?
Yes, I think at the moment, Japanese economy is now quite a healthy state with stable inflation at the 2% or 3%, which is really different from the past 20 or even 30 years. And if we look at Japanese wage, finally we had a clear acceleration in wage inflation, and I think that will be quite supportive for Japanese economy over the next several years at least.
Right, because for almost 3 decades, everything money-related in Japan was frozen in time, essentially. Salaries, interest rates on mortgages, and the price of lunch, for example. After years of deflation or low inflation, Japan is seeing its fastest price growth in more than 30 years. Now, from a European perspective, we've been hearing about too high inflation for nearly 2 years. So to many, low inflation might sound good, but tell us why that isn't the case or wasn't the case for Japan.
Yes, so I think at the moment, Japan's inflation recovery is quite positive for the Japanese economy. Again, over the past 20, 30 years, Japan has been struggling with deflation or at least disinflation. And the major reason behind Japan's disinflation or deflation have been quite limited increase in wage and also service inflation. But I think that is now different, and finally wage started rising quite aggressively as we had quite severe labor shortage at the moment. So a lot of the hotel, restaurant, and so on are having an issue in labor shortage, and they need to increase wages. And I think that will lead higher wage, real wages and real income among households, and will be good news for Japanese consumption going forward.
Right, so higher wages. What other factors might be causing prices to rise finally after such a long stretch?
I think on top of this strong wage inflation, clearly currency movement, Japanese yen's weakness has been supportive for Japanese inflation by higher imported price inflation. But I think it is important that Japanese yen is weak, but still just trading stably, relatively against the US dollar or euro. And now the imported inflation momentum is slowing down. So as a first stage of Japan's inflation recovery, large part of the inflation acceleration came from the yen weakness and the imported inflation, which is not necessarily good news for Japanese household or small, medium enterprises. But now the momentum or driver of the inflation is now shifting from the imported inflation to domestically oriented service and wage inflation. And I think that will be good news for not only Japan's big enterprises, but also Japanese households and small, medium enterprises.
So rising prices mean that the Bank of Japan, for the first time in decades, is no longer focused on quashing deflation. On March 19th of this year, the Bank of Japan ended its negative interest rate policy. So let's look at why this interest rate hike from the Japanese central bank was so historic. As pandemic inflation started to take hold and get really bad, the Federal Reserve in the US was aggressive to act and started hiking rates in March 2022. The ECB in Europe was a bit more conservative, but started hiking rates in the summer of that same year. But the Japanese central bank has been a major outlier, as you can see here, keeping rates at below zero and only now hiking to a range of 0 to 0.1%. Just above zero doesn't sound like a lot, especially in comparison to rates coming out of the ECB and the Fed. So why is this a big deal?
I think at the moment, yes, Bank of Japan just hiked only once from minus 0.1% to somewhere between 0 and plus 0.1%, which is quite at low level or lower level than US and Europe. But still, this was the first rate hike since 2007. So this is really kind of a historic decision for Japan's central bank. And also, Bank of Japan has been recently really cautious because Bank of Japan tried to hike its policy rate twice over the past 30 years in 2000 and 2006 and 2007. And after BOJ's rate hike in around 2000 and 2006 or 2007, we had a really negative shock in the financial market from the US dot-com bubble burst and also global financial crisis. And BOJ's decision to hike then was criticized by Japanese politicians and also investors and so on. So BOJ wanted to be quite cautious at this time to avoid any negative shock to financial market or economy. But still, even so cautious, very cautious BOJ, it's now time to consider a rate hike because inflation momentum is really kind of a real thing in Japan finally as the service inflation, wage inflation started to increase. So I think this BOJ's historic decision, first rate hike in 17 years, suggests that Japan's economy is now really changing from the past 20, 30 years.
Now, here's what an owner of a plastic manufacturer had to say about the policy change of the central bank.
If we were to replace one machine a year, we'd have to take out loans, and that would really add up and become a huge burden. Of course, the higher the interest rate, the bigger the amount we'd have to pay back. The burden will be higher compared to the time of negative interest rates, which we have had until now, and that's why I am concerned.
Yujiro, how will everyday people and business owners like the one we just heard feel this rate hike?
I think at the moment, rate hike by the Bank of Japan is still very small. Therefore, the actual real impact on the economy is so far, I believe, quite limited. That's why Japanese equity price still trades quite strongly at the moment. But I think inflation is now really much healthier than the past 20, 30 years. And therefore, there is a good chance or potentially a risk that the Bank of Japan needs to hike even more in the second half of this year and next year. And that could be the timing for Japanese household and the business to feel more negative impact on the rate hike. At the moment, this is just a first small step by the Bank of Japan. So impact on the economy is, I think, so far quite limited, but the situation can be different if the Bank of Japan needs to hike even more aggressively into next year.
So potentially the first step of many to follow. And some expected that the value of the yen would go up following the policy change. But last week, the yen actually hit its lowest value in 34 years. Those two developments don't seem to correspond. What's going on here?
I think at the moment, again, even after BOJ's rate hike, that was just a small first step from minus 0.1% to somewhere between 0 and 0.1%. And this level is much lower than interest rates in the US, Europe, and so on. And therefore, many investors, not necessarily Japanese investors, but non-Japanese offshore investors, trying to short or sell Japanese yen to buy higher yielding currencies, including US dollar. And therefore, there is a very still strong pressure on the Japanese yen to weaken against US dollar or as a higher yielding currency. But I think this situation can be a little bit different into end of the year or next year because again, there is a chance or risk for the BOJ needs to hike its policy rate.
This week, news also broke that for the first time in about 4 years, Japan's economic output is at full capacity, meaning the Japanese economy is producing the most goods it can with the equipment and efficiency it has. What does this tell us about demand in Japan?
I think this suggests, again, there will be quite strong upward pressure on inflation, especially in the service sector. And what will be positive going forward, in my view, is Japanese wage is likely to accelerate even more from April onwards, because Japanese fiscal year starts in April, and a lot of many major companies announced to hike its wages at a very high pace this fiscal year. And inflation is stabilizing around 2% or just above 2% at the moment. So so-called real wage, wage minus inflation, will be finally positive in Japan. That will be quite a big victory for Japanese policymakers, including Prime Minister Kishida-san. And a higher real wage will generate consumption going forward. So I think Japanese economy will be even more stronger going forward, thanks to this increase in real wage going forward.
Yujiro Goto from the Global Financial Services Group Nomura, thanks for speaking to us.